Hey guys, Andrew Henderson from Nomad Capitalist here in Phnom Penh, Cambodia. One of my favorite frontier markets to talk to you about 6 reasons to consider investing in frontier markets. Now this is especially good advice for folks who are younger entrepreneurs, people who want greater return on their capital, who are willing to take a bit more risk, because a frontier market is one rung below an emerging market. So here in Asia, for example, you might look at Malaysia and say that's an emerging market, or Vietnam and say that's an emerging market. Cambodia is very much a frontier market because you have less infrastructure, you just have so much less development. Now if you look around this city in particular, you see a lot of malls and restaurants and everything else going up, so there is a lot more development, but it's still a frontier market. And so I'm going to talk to you about specifically reasons why you want a frontier market, which is the riskiest of the markets, so they say. And really, the biggest reason why you would look at a frontier market is the potential for long-term growth. I have a buddy who runs a property fund here in Cambodia, for example, and one of the things that's going on all around town is developers, are coming in and buying up shop house apartments and small little stores in an entire block because they want to come in and build a skyscraper or build a mall or build something else. And people in those situations can make 2 or 3 times the actual value of their property. Now there's no guarantee that'll happen to you. You have to have the right investments and be smart. But even without that, you've got excellent long-term growth of your capital. With his particular property fund, they target a projected return of 10 to 12% every year, just as a relatively conservative baseline. So over the next 10, 20, 30 years, I think that markets like Cambodia have a ton of potential, because what a frontier market is it's an emerging market 20 or 30 years ago. They say Phnom Penh, for example, is Bangkok 30 years ago. And if you look at Bangkok in the 80s and look at it now, it's so much more developed. You imagine how many times people have made their money back, how many X people have made their money back, so long-term growth. In the meantime, though, you've got greater potential for yields. Because fewer people want to necessarily go to a frontier market, you can earn higher rental yields. So again, my friend here with his fund can conservatively buy properties in pretty conservative blue chip areas and get 10 to 15% rental yields, unleveraged. So whereas in the UK or the United States or Australia or, God forbid, Switzerland or somewhere like that, you might be looking at lower single-digit returns. Here you're going to be definitely in the double digits. So while you're waiting for that long-term growth, you get a good yield. Another reason I like frontier markets is because the returns are often uncorrelated to the rest of the market. You've got countries that are growing so quickly. Again, to use Cambodia as an example, I don't think there's been a single year of negative growth, or even a single year under like 7 or 8% growth in a long time. So the 2008 financial crisis, the Asian financial crisis, all those things really didn't affect Cambodia in the same way as the rest of the world. It's just been one growth chart. And obviously there are challenges with that. There aren't as many property managers, or there aren't as many people to do everything turnkey. But if you know what you're doing, or you have someone who can do it for you, you can enjoy uncorrelated growth. Even while the rest of the world suffers, you may not face those shocks here. And so that brings me to the 4th reason, is diversification. Cambodia, for example, does use the US dollar, so there's not a lot of currency diversification if you're holding US dollars. Other frontier markets have their own currencies, which means that you can enjoy currency diversification into a frontier market currency. But being in a different type of environment than you've ever been, probably with your investments. Most people from the US invest in the US, maybe they invest in Canada or Europe, or if they're getting really aggressive, South Africa or something. You get the diversification of a totally different market type, a totally different growth profile by coming to a frontier market. And for the average investor who's in a retirement account or a 401k or something like that, it's a great diversification to add to your portfolio. You also have, I think, higher probability. Not only will you do relatively well, I think, with your investments in frontier markets, but there's a higher probability it'll work out. For example, let's just talk about starting a business. In the United States, so many people have businesses, so many people are doing all kinds of things with business, and the competition is really tough. Whereas if you come to frontier markets like Cambodia, even Georgia, where I talk a lot about, you've got a lot of opportunities for very basic service businesses, for very basic online businesses. I mean, heck, even Australia is just getting Amazon.com. So I mean, in countries like this, you have a lot of room for e-commerce, for all sorts of different opportunities, as well as in real estate. And obviously, that's why the returns are higher, because not as much exists yet. Certainly returns in the long run may go down as your properties or as your businesses depreciate, but you've got a much higher probability of success, I believe, in that you're less likely to see the economic downturns that you see in the West every 7 or so years. You're less likely to have a business failure because there's so many more opportunities, so higher probability of success. And the sixth reason, the last reason, is lower entry points. Obviously, it's pretty easy to start a website these days, no matter where you are in the world, including the United States, for relatively little money. But if you want to start a quote-unquote physical business, if you want to start a business on the ground, or if you want to invest in real estate in a great area, in a blue chip area, it's a lot cheaper here than it is in other areas. City center property in Phnom Penh, I mean, there's properties for $20,000, $30,000, $50,000 for a pretty good property. You want to go to city center London, I mean, forget it. City center Los Angeles, you can't do it. And so in frontier markets, not in all cases, because there are some frontier markets, especially in Africa, where properties in the city center are grossly overpriced. But in places like Cambodia, you can get in at much lower price points for really high quality real estate that's going to stand the test of time. So as opposed to London, where you're frequently pushed out into areas that may or may not take off, or New York, Los Angeles, etc., here you can buy in the middle of the city, in the core of the central business district, where everyone's always going to want to be, and you can do so at a far lower price point than you could do in the West. So there are so many different frontier markets. Everyone has a different profile, from Paraguay to African countries to here in Cambodia to all other points of the world. Obviously, there's lots of homework to be done on the specific place that you want to go, but hopefully those are 6 reasons that at least allow you to consider the idea of investing in a frontier market, diversifying your portfolio, and earning some higher returns by, as we like to say here at Nomad Capitalist, going where you're treated best.